learned some great stuff about Scott's background in part 1. As we start part 2, Scott just got kicked off his lily pad, and he's asked the questions about what do I do now? Let's take a listen to part 2 and learn more about Scott's fund, some of his trials and tribulations, as well as his success when he figures out what he's going to do next. You're sitting there going, what can I do maybe?
Yeah.
And what do you do?
So at the time, I made a couple false starts at what do I do? So 2011, so I started my own RIA at the time in 2011.
Which is a registered investment advisor. So it's just more financial planning, wealth advising. Go ahead.
Right. But it was on a network where I really, truly didn't have control. So I felt like it was a lateral move. I'm like, even though you do your due diligence, you do your homework, and everything looks and smells great, and then you get there and you're like, well, but I still feel like I'm working for the corporate mothership. This was under Wells Fargo Advisor Network.
Okay.
So it was a 1099 independent contractor. So I own my own company, but
you're not an employee.
But you kind of still were.
Right.
So
because they had rules, right? You had to do it this way. You had to use this.
Right,
Got it. Okay.
Right. Just way more. They want a broker in the box.
Gotcha.
And I was not ever a broker in the box. I mean, that's just...
You were never kind of constrained to a specific area, and this is how you do it, and don't kind
of... And also, it's probably a pertinent point for you guys to follow, is I started to put my own capital in other private businesses in maybe 2005.
Any of them that you can mention a little bit? Not necessarily the names, but what do they do?
Well, so I have a life science company that I started putting money in.
And what does that mean exactly? It seems like such a broad, life science could be anything.
Because it is. It's a sample preparation technology company based out of Purdue.
Oh, now it's much clearer. Right. What is a sample preparation?
So sample preparation, and now you're going to get out of my sandbox pretty fast. You're going to understand Wolfie doesn't really know a whole lot about that. So, but sample preparation technology is really what happens before it goes into a mass spec.
So it's taking a sample of something and then analyzing it.
And automates the sample.
Mass spectrometer. I thought sample preparation was what Costco on Saturdays.
Oh, yeah. You go through and you have a little bit of hummus.
I think that's maybe what I bought into originally.
Dude, I love the pita bread. And this dip, the artichoke dip.
This is awesome.
I get 10 pounds of this for $6. Right. That's not it at all.
That wasn't it at all.
For $6.
Right.
So it's highly tech related to the sciences.
In the science industry. And that, candidly, that business was a nightmare for quite a while. It's doing very well today, but it's 15 years later. Long time.
Wow. And you're still in it.
Still in it.
Wow. There you go.
Yeah.
So you got
a lot of these deals are probably highly liquid.
Oh, smashing. If I call them up tomorrow.
That's a total joke.
Yeah. Yeah, no, for the audience.
Exactly. That's why I'm trying to do side notes.
Yeah, liquidity is the ease of turning it from company ownership into dollars or vice versa. Stocks and bonds are considered liquid. Cash is obviously liquid. Sometimes you make investments and it's like there's no way to get out.
Right.
And I would tell you that part of your learning curve in life is until you put your own money in something you don't understand.
Yep.
So and unfortunately I'm a slow learner, so I've lost a lot learning along the way, all kinds of business levels.
If you had to guess, what percentage of wealth management people or advisors who are selling, stocks, bonds, investments actually have put their own money in and understand what the risk is? They're explaining to people what to do with their money, but haven't done it themselves really to an extent that they really understand.
It's a heck of a question. I would tell you, I don't think, and given I ran an office of advisors, so I have at least a reasonable sample size of advisors understanding what it means. But number one, the big money center banks and big broker dealers today don't want their advisors doing it because it's all about then you got disclosure issues, and so they want the broker in the box.
That just says, hey, here's the investment, do this.
Do this. And we don't want you to truly understand what it is, meaning...
Hey, what's your risk tolerance profile? Okay, buy this.
Yeah, exactly.
Exactly. That's 100% right. And so, and that to me is managing money for the masses.
Yeah.
And so I never was that guy. I mean, even though we were running a lot of money for fairly significant people, I wanted to understand the business.
Yeah.
And so to me, I needed to learn, and the only way I could learn was to get in the game. And so I got in the game, and I'm like, I got to figure this out.
Interesting question I was sitting there thinking about. Do you think you overreached on the life sciences? You didn't know what the heck you were getting into.
For sure. Had no clue. You want to know how much I didn't know? I did. Yes. So I didn't know about the operating agreement. I didn't know about the product. I didn't know about their profit margin. I didn't understand their inventory. I didn't understand their costs. I didn't understand their go-to-market strategy. I didn't know anything.
Can I say, I know this is going to sound really bad, but can I say sometimes you just got to jump in and just get kicked in the head like 4 or 5 times?
Yeah.
Before you actually understand and know what you need to know. Tony, you've got to know too. How many companies have you been in? You tell me stories all the time, and I'm like, oh my God, that guy should just be punched.
Well, the funny part is too, the investors, like if you come, like you're a software guy and you hear about life science stuff, oh, this is some new implantable device your body will absorb. It's really cool. You're like, oh man, I want to invest in that. You don't know anything about that, but it sounds cool. The same doctors that would be like, there's no way that's going to work.
Yes.
Tell them about your software company. Oh man, I want in on that. It's almost like stuff that you don't really know enough about.
It's
so much
really enticing.
It's
and
enticing.
Really
it's like that's got to be great because you don't know enough to know whether it's good or bad. You just hear the excitement of the guy that's pitching it to you, the guy or gal. The founders are excited. It sounds reasonable, but you don't know anything about it. It's easier to convince yourself to do that than something you know a lot about because you know what doesn't work.
And I guess the point here is, a lot of people have done a lot of stupid things and still been very successful.
It works sometimes. Yeah, still works.
And sometimes you're over arrogance.
Believe it or not.
Go ahead.
$22 million loss carry forward. Anybody know what that means? We got a whole bunch of cash that got lost. However, we've been profitable 5 years running.
And not paid any taxes.
Right.
So $22 million loss means that over the years, they've lost over $22 million.
Right.
So that's like a bad thing. But
Bad.
Really bad. But when they take that and they start making money, they can use up. Like if they make $2 million
in profit,
there's no, there are no taxes for the first
because it's
$22 million.
Yeah, so that's where people go, oh, they made $22 million, didn't pay any taxes. Well, the problem is they had to lose $22 million before to get to that point, which is a horrible thing.
Guess who had some of that 22?
Yeah, you.
A fair amount.
But this is where we talked about upstairs, the persistence. You had to stick with it. Right. You had to believe in it, throw extra money, and you're going, am I throwing this down a hole?
We recapped it in 2010.
Recapped, what's that mean?
Meaning we had to put more capital in.
Exactly.
Right. Fancy word, get your checkbook out.
That's fancy word for, oh my gosh, this is going to be tough.
Well, and it's another fancy word for if you don't want to put your check, if you don't want to write a check, then what your share is not going to be as much as it was afterwards.
That's right.
Yeah,
that's right.
So you got your checkbook out and
got involved in the company, way bigger this time. Got involved
cash-wise or cash and time?
Both. Understanding who the operator, go to market, what's our P&L look like, cost of goods sold, all of that. I'm all in.
So now you wrote it.
Is this more micro or macro now?
I'm down in the micro side of my degree. Because I had to understand. Yeah, because you're like, I'm lighting money on fire.
But the other
I don't know any other way to do it.
And the thing I was going to say is this is pain in education.
Right.
Because now you're throwing money at it and you're going to have to actually be in it.
Right.
But you automatically, I could see it in your eyes. Nobody could probably see it. But it's just like the stuff that I didn't know, I sure as heck knew now what I should have been asking for.
Right.
And it's amazing how much that changes when you have to get out the checkbook and then get involved.
Operating agreements are big. There's lots of stuff that's
now you're spending time away from your wife, your kids, if you had it, whatever.
You're stressed out.
And you're stressed out, and you just got to get on it. But that's really interesting.
I just read this interesting article the other day. I get up in the morning and I read Twitter, and there's really awesome stuff that happens on Twitter. Like I've learned a bunch. There's also a big time suck over there. But one of the things I heard was like somebody was asking about a reverse financed internship. These are companies where you have to pay $15 an hour, for example, to be an intern there.
Wow.
But that's what he's talking about there. Like, I put money in, now I got to go work there. I got to put money in, I got to go work there to learn something.
So that I can pay to lose my $22 million.
How much do you think I know about life sciences, too, by the way? Like, still to this day, zero.
Hey, I'm going to sit here and argue with you because you don't necessarily need to know about life science, but you need to know how to ask the right questions in business.
We made money. I mean, I think it might be 5 years straight. We're sitting on $1.7 million, $1.8 million in the bank today.
No way. That's awesome.
Yeah. So we got it. I mean, it's not a killing company.
Right.
But we're profitable.
And you're making it back.
And we're making it back. And it's been a journey. But
of course.
You know what? The most painful, the most expensive and most painful lessons you learn are the ones you remember.
That is exactly the truth.
I mean, if you don't, what is it? If you don't remember history, you're doomed to repeat it.
Yeah, right. Exactly.
When it's expensive and painful, you're going to remember.
Right.
So now you're like, you've been successful. You've done the wealth management thing. You're starting to dabble in other items. And, we met you because you've got a private equity firm.
Right.
And what kind of happened between the life sciences to get you to?
Well, so I won't bore you with all the pieces and parts, but a lot of it was I felt like a fund in an investment portfolio. So if somebody has an investment portfolio of $1 million or $2 million or $5 million or 500, it doesn't matter. They should be looking for opportunities to help their internal rate of return out.
Right. So what we're talking about is, hey, we got investments. Maybe we can earn 6, 7, 8, 9, 10%. But in order to push it a little higher,
right,
you got to be a little bit more committed, a little bit longer term.
Right.
And so you're sitting there thinking about this.
Right.
And what did you come up with?
So the whole thesis was built on one at a time private placement memorandum investing. And so because I just walked you through one example, I have lots of those before I got to the fund. But I did a lot of them.
But a private placement is saying, hey, you give me some money and I'll go ahead and invest in a company.
Right. Privately.
Right. So not buying a stock on a stock market. Correct. Invest privately, and we're going to help this company do really good things.
And everybody should know that all companies start private that are publicly traded. I don't care if you're Amazon or Microsoft.
And that's a great point.
They all start private.
Except for a SPAC.
Well, potentially, yeah.
Let's not talk about SPAC.
No. You're right, though. It's like, and most of these things that happen overnight to be huge successes
are not overnight.
They're like, they took 10, 20 years to
get to where they were.
Tons of elbow grease and some good luck and, the right people in the seats. And there's just a whole lot that has to be right.
Sure.
I.e., a fund needs to be diversified.
Right.
You need to have your money in lots of stuff.
You're not just in construction or just in beverages or just in manufacturing.
Or technology. Whatever. You can't be.
Right.
Because you never know. You just don't know. Execution risk is very high in a small business.
Right.
You don't have a ton of execution risk at Microsoft or Abbott Lab or
Which means if you don't execute or don't do something, the whole company will fall apart.
Correct.
But in a small company, you got 4 people. If one of them doesn't do their job, you could lose the whole company.
That's right. I mean, literally gone.
Yes.
So zeros, i.e. put money in.
Get nothing back. You get a goose egg.
Zero back. So you're saying, okay, well, if we're trying to make 20% on our money, well, we're going to have some stuff not work.
Exactly.
We're going to have some that's going to be okay and some be okay, maybe a little better than okay, and maybe something really good.
Yep.
And that's kind of what we've been building. So
you went out. Can we talk about some of the numbers in your fund or not?
Sure.
Okay. So you go out and you raise, which means you talk to people and say, hey, do you believe in what I can do, and I've got a great team, and can you put some money in, and we're going to put that money to work, right?
I tell them I drove a beer truck.
They turn around and walk away. Yeah. Wait a second. I like this idea. You got some gumption. You got some moxie. Let's go. So you go out and...
Wait, I'm investing in a beer truck?
Yes, exactly. That would be you.
Because you got my interest right now.
Yeah. What's in the beer truck?
Oh, that's right.
What's in the beer truck?
That's well, it's beer. Maybe it's wine. Hey.
Wait, is there
19
is there a wine truck? I want to buy it. I got to get a great idea.
Yeah.
Wine trucks.
Wine truck, yeah.
So I think I saw that, it's a $20 million fund?
Almost 30 now.
Almost 30. Yeah. All right. Mm-hmm. But that's the amount of money that went in.
Correct.
And I'm not going to say anything unless you say it. But that's not what the $30 million is worth today, right? Because those firms.
You were talking about cost, and you were more correct at 20. It's more worth about 30.
Oh, okay, good.
Yeah,
okay.
right.
But I thought one of your bigger ones was worth substantially more than
It
that.
is. We just haven't closed our books.
Gotcha.
So you're right. It is worth quite a bit more than that, but our books aren't closed as of March 31st yet. So
and I think a lot of people sit there and go, hey, I'm pretty smart about this and I did some good stuff, but you got to get lucky too, right?
Oh, for sure. For sure.
And the harder you work, the luckier you get. And you've got some really good assets or companies that you have in there that are doing some really incredible things already.
Yeah.
And,
super exciting stuff.
And you're kind of getting the recipe. Is that kind of a good way to put it?
I would hope so. You don't, this will be, so you have me back on your show in 5 years and I'll tell you if I have the recipe or not. But once you start, you're going to refine it.
It's like pattern matching.
Yeah.
What works, what doesn't work, how do you learn?
What would you do different?
Yeah.
Yeah.
But that's where you started, because you were getting kicked in the head with all this stupid stuff and not...
Mark up here. Yeah.
You must have been a lot better looking there, Scott.
Oh, man. Yeah.
But then you got to it and you're like, hey, I can do this. I'm starting to have some success. You get the $20 million fund worth more than $30 million.
Right.
And then, and now you may be raising money in the future for another fund.
Right.
Because you're having some success, right?
Yeah, I think what we're doing and I think what we're building is a void in the marketplace, because I think that
I love this, by the way. So give it to us, man.
Yeah.
Give it to us.
Yeah, I mean, I think there's a whole bunch of businesses that are exciting that people are working really hard at, and they've started to show some revenue. So we're not talking about startup or angel, which Tony knows a lot about, because I've lost a lot of money over there too. So I'm trying
too.
Okay. I may have lost $1 or $2.
Yeah,
just being real. I mean,
but that's how it works.
That's how it works. So, anyway, I think what we're seeing is that there is a market of the city we live in Indy that I think we see tons of deals, tons.
Right. And not huge dollars, right?
No, $1 to $5 million is what we want to put to work, and I think with the right management teams, where you can bet on good people that that you trust,
sure.
And if a common theme you see in me already is that I'm not great on execution at management teams. I mean,
but you're a fantastic person like Tony, which we call a what? The big V.
It's the visionary guy.
Visionary guy.
Right.
You guys get together. You can talk for hours about nothing.
And then we try to figure out what idea was any good.
Yeah, exactly.
Well, 20 ideas a day. 19 of them are horrible.
19 and a half, dude.
So I don't know
40 every 2 days.
So my vision, Ben, is I don't know if this is any good, but this is the vision. I don't know whether it's right. But I think the vision is that this model we're building is good for a lot of markets.
Right.
I think there's a market hungry in Columbus, Ohio, market hungry in Kentucky, all over the Midwest. And, if we do it right and we execution's huge.
Yeah.
And we deliver to our shareholders what I want to deliver to them.
And so you're really talking about, hey, we're in an area that's overlooked by the bigger guys because, it takes just as much work to write a $5 million check as it does to write a $100 million check. So if you kind of go a little bit lower and look at these things that have maybe a good, I don't want to say a logo, but a good presence. They've been around for a while. Can we talk about the one with the the garage door?
Oh, yeah, sure.
It's maybe not the sexiest thing, which means it's not tech. It's not, it's like Amazon or whatever. Right. But it's been around. It does this great service. Right. It's not a $50 million company.
No.
But you might be able to do something really interesting with it.
Yeah, I mean, I think all of those things. I mean, if we wouldn't invest if we didn't see growth. I mean,
absolutely, you can't do that.
You can't do that. And if we didn't think we could grow, I don't care what it is.
You just can't.
You just can't. So, but if we think we see it and we think we can go get it,
right?
And then let's see.
Exactly.
I mean, that's the whole thing.
And part of it is you had the background of managing people's money. Mm-hmm. You had the background of getting kicked in the head.
Right.
when people talk to you,
and running my own P&L at the office, so when you're
Exactly.
running, we were running over $1 billion when I was done, and we were running a fairly significant P&L at the wealth management I was running, and,
Yep.
and profitability was tracking right where I wanted it to track, and so it was, and that was predictable once you really got the formula. So when that's been something that translates. I don't care what it is,
Right.
Chemical company, garage door company, technology
Exactly.
company. It just doesn't matter. Culturally, too, I'm trying to make sure we do that everywhere we go, just like I did with my people.
Yep.
Is that if we take care of the people and they actually can look you in the eye and have a glass of wine and say, hey, that guy's an okay guy.
So you got the technical skills, which is how to run a business, right?
Mm-hmm.
How to read a balance sheet, an income statement, all this stuff.
Right.
Then you got the soft skills, which people can trust in you. You can build the team.
Mm-hmm.
Plus, you're also building up like the network of the banks as well,
Yep.
so that the banks are now you're not fronting this whole thing on your own, right? You
Right.
get people to put in money into the fund.
Right.
You get money from the bank to say, hey, I've got. Just making this up, $1 million from the fund I can throw in. Can you guys throw in $3 million? Here's the company. And so now you bring all these skills together, right? And you're just doing it over the years. And now with the network and everything's going on, people are going, how do you get so lucky? You did all this stuff all the way through,
sometimes
right?
people want to take the beatings I've taken. They wouldn't say, that was lucky. I don't think they want to sit over and take the beating.
I get it.
There's a lot of beatings in there. Yeah. Yeah.
So you got this fund. You got a new fund that's coming out.
Yeah.
I know, Tony, you had a fund too, right, with the Angel, and you were looking at getting another one going, right? Is that right?
Yeah, it tends to be the game. If you're successful with one, the next one is pretty easy to raise.
And what's successful, by the way? Is that just you're getting a nice return on your money?
Yeah, that's a good point. I mean, what's the target? Is it 20% IRR or bigger? Is it?
And IRR means 20% compounded on each year.
Yeah.
Right?
So,
Internal rate of return.
Right, because you got more risk, so you need a bigger return to justify that.
Right.
Right.
But if you're going after a bigger return, you may not get it, right?
Right.
But
I think it's 20 to 30 is where we're shooting. I don't know where you go, but that's
I think that's when you get into the risky area. Like for us on the angel seed stage, we're looking to get in the mid 20s at the low end of an IRR. So you got to have that one or two big ones in your portfolio to make up for the zeros, because there's
5 or 6 zeros.
Like in a startup, there's going to be zeros.
Oh yeah, absolutely.
Yeah.
You look at that, and then and a lot of them are like, if you're getting the venture funds and all this, they talk about multiples, MOIC, multiple on invested cash. So like try to get a 3x. So you put money in, you get 3x back. That sounds great. If it happened in a year, that's awesome. If it happens in 12 years, it's still good. But it's like,
Right.
But it's like, the
math.
multiple is the amount of time is really important.
Sure.
Right.
It's significant. Yeah. So
Right.
but yeah, that's that kind of stuff. And for us, we're like, hey, don't take all your money and put it into
Our fund.
crypto or our fund or one stock.
Amen
You
to
could
that.
get lucky.
You can.
could get lucky.
Right.
But
It's gotta be a percentage
It's
of
just
what
like going and
people do.
putting all your money on one number on roulette.
Yeah, it always cracks me up. You know how you hear all this crazy stuff about America and you say, well, Bill Gates is buying all Americans' farmland. I hear all that all the time. I'm like, well, no, he's not buying all the... What he's doing, by the way, he's got a lot of money.
Yeah, exactly.
And he needs to diversify what he's doing.
Absolutely.
I don't know him from Adam, but he's going to... if I were him, I'd buy some farmland.
Well, some of that stuff's got some tax advantages because
Well,
our
of course.
friends in Congress have made some rules that most people don't know about.
Right. And think he doesn't figure that.
But if you got $100 billion and you're
Well,
diversifying
he doesn't-
5% of it,
5 to 10
$5 billion,
Right,
that's a lot.
of
He
farmland.
doesn't have to figure it out himself. He pays somebody to figure
Right.
it out for him.
Yeah.
Which is basically when you're in a fund, you're putting money in, and there's some fees paid to those people. Hopefully,
Right.
they're smarter about it or more experienced. They're going to help
more
you
experienced.
navigate that. Yeah.
Right.
So it's pretty cool though, because now can I ask you how many companies are in the fund now?
12.
12. If you think back, I don't know, what do you think, 10, 15 years? And you think back, oh man, one day I would love to have a private equity firm of 5 firms. That kind of blows your mind a little bit, doesn't it? Doesn't it?
It totally blows my mind, honestly, because, sometimes you dare to dream and you think, I can't do that, and 1,000 people tell you can't do that. And that candidly sometimes honks you off to the point, well, maybe I can.
Yeah, I'm just going to prove you
I'm
wrong.
going to prove you wrong. Yeah. The 22-year-old kid from Merrill Lynch with 2 suits and a Honda Civic, can he make it at Merrill Lynch?
Likes to change his tire in his underwear.
But did you show up for the interview in your underwear, or did you put the suit on?
Well,
That's what got him the job.
Tony, you can't ask that question.
Oh, yeah. Okay. Edit that out. Beep.
But that's like great because, a lot of times I think we all sit there and go, man, have I ever done anything in my life? And
Well, so many times if you think you can't, you're right.
Yeah, exactly.
I mean, so you don't constrain yourself. Worst case scenario, you get kicked in the head and you learn something.
I think here's my philosophy of life, and I think you guys probably agree with this, is that I would much rather go through life chasing the lion than being scared of chasing the lion. And I would rather try to chase the lion into the ditch on a snowy day than to just be too scared to go after
or
it.
Watching from a distance.
That's
or
right.
whatever else.
I don't want fear of missing out to me.
FOMO.
Right. No chance for me.
Yep.
No chance. And so now that could have wrecked me 1,000 times along the way, but I would much rather live richly. But richly to me is not about the
money. Not money, just kind of life, living life.
Being real.
Yeah, being real.
Being real.
Yep.
And being real is, I don't care who you are, you're going to have to get kicked in the head a fair amount. And so.
Because from my perspective, you guys know, going through some tough stuff. But I just the other day asked myself, would I have preferred not to have gotten to this point? And I can't believe I'm about ready to say this, but I said no, because that means that I would have been sitting on the sidelines, and I just can't do that. That's just not me. So I've got a little tough road to hoe, just kind of like you did, but you got to jump in.
You want to go down swinging.
You want to go down swinging. Amen.
Yeah,
Amen to that.
You got to.
So what do we see from you, Scott, then, coming forward?
I don't.
Another fund, 20, 50 companies, 100 companies?
I don't know. I would tell you, I'm in a fortunate seat right now where there's not a ton of stuff on fire, and it's like the first time I'm not a fireman in a while. And so I have to kind of gain a little perspective again, because I've been in the fire, putting out fires and trying to make everything.
But I think you're getting better at getting the right people in the right seats.
Yeah.
RPRS, baby.
Amen to that too, because that's been huge. And if I look around, and the reason why I have more peace is because I have better people.
In the right spots.
In the right
Not
seats.
just better people, but better people doing the...
And so that's huge. I mean, which is, you guys talk EOS in here, but
absolutely.
It's, we follow EOS all over the place.
And EOS is the Entrepreneur's Operating System. It's a philosophy that's used by, what's his name?
Gino Wickman.
Gino Wickman, thank you.
Traction.
Which essentially says, hey, let's all speak the same language.
Right.
Let's say what we're going to do. Let's do it. Let's put it out every 3 months, every week, every whatever. Right. And so it's just a philosophy of how to, in my opinion, get things done. But I'm an integrator.
Well, it is, but it also it identifies problems and operational problems all over a company.
And lets the visionary be the visionary too.
Which is freeing, right? It allows integrators to be integrators and visionaries to be integrators, and financial people.
Visionaries to be visionaries. You said visionaries to be integrators as well.
Did I? Well, no, I can't stand that seat.
I know you can't.
So anyway, but sorry.
That's why I wanted to make sure you got it clear.
No, thank you. But I meant financial people to be financial people, and salespeople to be sales. Everybody sits in their seat and says, "This is how I'm wired and how I'm made."
Exactly.
And if you just let me do my job,
I'm going to do it really well.
I'm going to do it really well.
Yep.
Yeah, that's funny you say that, because with the software company Single Source, my partner and I, Marty and I, would just drive each other nuts, because he's total integrator and he wanted me to be more like him, and I'm total visionary. I wanted him to be more like me. We drove each other nuts, and then we figured out it was okay to be separate. We just went through the roof with everything. I mean, it was just cranked. Yeah,
I mean, that's the whole rocket fuel. Right?
Yeah, right.
Rocket fuel is when you put two things together and it just explodes in a very, direct, very contained direction.
Right.
And you do just great things together. Mm-hmm. And I think, part of it, I like Sam because he's a little bit more like me, but I see a lot of the value, that you bring too. And just to say, Scott, just go do your thing, man. once you do your thing, you're going to be 10 times more valuable. And
I think that's the best part about Sam is he's like you. I mean, he's so structured and he's so procedural and he's super smart and but he's got the same value system I do. You know, he treats people incredibly well that are around him, but he also doesn't put up with crap.
Yeah.
And you don't have time for crap.
With 12 companies,
you don't have time. You have to correct the problems when you have problems. And
and I think that's a little bit, just to give you a little bit of kudos, that's a little bit, Tony, I'm speaking for you, but you can say nay. It's a little bit of the reason why we're kind of drawn to you is just because, hey, you guys kind of figured out who you are. And you also said, hey, we're going to do big things, and we kind of want to be successful. And so it's kind of cool.
Well, obviously, we appreciate both you guys. I mean, our friendship with you guys both is, you guys are obviously talented people. And, well, I mean, I started reading some of these private equity guys that they want to invest in A-level talent. And what does that mean? And and starting to define what is A-level talent. And, and we start looking at what we've done and who we've changed teams with, and we have A-level talent.
You did some great things
in a lot of our companies, and that's a huge thing that got done over the last 3, 4, or 5 years. It's just we went from operators that didn't know what they were doing and think.
It's amazing how much better life goes when you got people doing what they're supposed to.
I've heard some stories.
I know
that we don't want to talk about.
We don't want to talk about them because honestly, but just so your audience
there's a gag order.
But just so you know, your audience should know that. I mean, that's and giving them grace, they just weren't in the right seat.
Yes. And honestly, it's okay. They can be in a different seat.
Even though it was painful, if I really truly said what was wrong there, it was they were in the wrong seat.
Agree.
I've seen it seems like a really tough and hard thing to do, to come in and like, oh, okay, we got this person may have to go. These two people need to swap seats, and it's uncomfortable. And then, like 3 months later, they're like, "Man, this is phenomenal."
I know.
I can't believe we didn't do this before.
If you get the combination right, it's like incredible what happens.
Think about what we just did at one of the things we're doing. I'm sitting there going, "Guys, don't you see what needs to change here?"
I was sweating about the change. Like, oh my God, we're going to change. Everybody's going to hate it. Now we've done it. It's like everybody's like, "Man, this is great."
I feel liberated. I can finally get it done.
I think about dude you put in the right seat. That was awesome.
Some of those are just, I'm like, this is brutal. We got to get this
I just
person.
know when they keep changing the seats, I'm like, oh, dude, somebody's going to fire me.
You better beware. But it's true. There's a lot of learning there, right?
Well, I think the other part about, though, I mean, we believe in our team, too. I know there's going to be pitfalls in business, but if you have the right person in the right seat, I'm okay with that. If people are doing the best they can do with the circumstances they're given, that's not that you want to stick with those people.
Right.
I mean, there's a time to stick and there's a time to go.
I agree.
If they're in the right seat.
Right.
So there's times in business where you just need to be patient because businesses cycle and things happen. And
I've seen it with, upper management says that person's got to go, and you're just like, you know what? I just gotta respectfully say you're absolutely wrong, because you gotta go with it. But having the right people, I've seen the most amazing things. It's all about people. I tell people, they go, "You've done such a great job, Ben." And I'm like, "Whoa, time out." It's all the people.
Always
There's no way I could have done any of this without those guys. And so, but you're putting together quite a fund. You're putting together quite a success story.
Yeah, I'm cautiously optimistic about it. I keep looking around to say, is there something on fire I don't know about? But
and you got a lot of things in the hopper, when we were talking with Sam, there's like a lot of things going on. And so I really hope 2 years from now, year from now, 3 years from now, we talk to you again.
Yeah,
don't go too far out in the future.
6 months from now.
Yeah, we'd like to, I appreciate what you guys are doing here. And I hope it helps somebody. And
we're trying to get out to people that, success doesn't come overnight.
Right.
There's a lot of persistence. You do get kicked in the head don't get discouraged about it. A lot of people have gone through that way.
I think what you're doing today doesn't mean that's what you're going to be doing tomorrow, and some of that even goes to say, illustrate the whole right person, right seat. You might be doing some stuff and you don't think it's right, and it might not be. You might be in the wrong seat, forcing yourself down a path that you shouldn't be in, or the other part might just be about persistence and getting some good advice. I don't know. Did you have anybody who was a good advisor to you?
Or I've had a lot of great people around me. Thankfully, I mean. I almost call them people of peace because they give without expecting anything in return sometimes.
Nice.
And so my father-in-law is amazing for me. He's a shareholder in our fund. But more importantly than that, which, number one, he wrote a check. So
thank you.
Which is obviously good. But then he's got skin in the game. So to me, it was the opinion, not just somebody from the cheap seat saying, you need to do this or that. He was in.
Yep.
And so he knew the struggles we had and never once wavered. Never once wavered.
And father-in-law. And bigger than you are.
Yeah, a lot bigger. He's like 6'8".
Right. He could.
Is he really?
Like if you did something, if you did something bad,
right?
He just with the missus
and a lawyer,
girl,
and a lawyer.
I mean.
Yeah, it's not good.
How do you even make a move or decision?
Yeah, it's that's what I'm telling you. I mean, there's a lot of game-changing wreckers out there that just would have been like game over.
Right,
there's a lot of stuff that could have gone the wrong way. And I know, but I've had a lot of people like David. His name's David, and
So advisors, people guiding you,
good lawyer,
not asking for something back.
Yeah, I have a lawyer. I don't know if I should say her name, but I give her her first name anyway. But she's amazing, and a lot of business that where I've gotten kicked is in and around operating agreement issues. And for those that don't know what that is, an operating agreement is the document that governs how a company's run and who can say what about how making the decisions in the business.
Who could do what,
Pat's been tremendous. And again, I've spent a lot of money on lawyers, lots and lots and lots of money on lawyers. And there are some lawyers that just charge you a fee, but they don't care about what you're trying to do.
Right.
So she has been amazing at not just providing phenomenal advice, but for a reasonable price. And then more of a life counselor about, how, I mean, because everything you're involved in is regulated and, there's so much stuff going on. And she's just been incredible.
Help you cut through and...
Yeah. Well, and give me an encouragement, too.
Well, it's just funny. You talk about the operating agreements and investments, and there's, like the legal term of you may do this or you shall do this kind of means something different. And then is it a majority, a supermajority, or a unanimous decision? And you don't think about that much when there's, more than one person in the company. But like you start getting into 3, 4, 5, 6, 10 people involved, all of a sudden those things become really big and political, and you don't realize when you're signing the agreement what that means down the road. So you need somebody who's been through that can kind of help guide you through, you probably need to do it this way.
It sounds like she's one of those people. I know I've dealt with her, and I've always been real positive, quick, knows what we're talking about, moves it right along. I like that in somebody.
Me too. And she doesn't waste your time.
Nope.
And she doesn't BS.
Nope.
And you got to say, your spouse, is part of the deal. My wife, my gosh.
Really? Your spouse part of the deal?
Yeah, part of the deal. Because if you haven't noticed, they're there when you're getting your teeth kicked in.
Oh, yeah.
And for them to still be standing there.
After it's all over.
Amen,
brother.
Still believing in you. There's a big deal there, for...
Yeah.
Yeah, I don't care, girl or boy, if your spouse, when you get into a game and if your husband or wife
supports you, and
you gotta have that. You can't. That support network's huge.
Yeah, I'm lucky about that. You're looking at me. Is there something?
Nope.
Do you need to talk about my sister?
Let's do that in a different episode.
Okay.
No, she keeps me. Well, my wife is a integrator. And I'm the visionary, so
very different.
That works out pretty good.
It's funny. It's like oil and water sometimes.
There's a healthy.
I don't mean it in a bad way. It's just different.
Give and take.
Well, at least you guys have I know your wife too, and she has a good understanding of you. And I think
Probably too good. That's not fair, is it?
yeah. I mean, right. I mean, you got to have an understanding of each other to appreciate each other.
Exactly.
You just do. Yeah.
And they know when you're like really down and can bring you back up and all that. So that's some good stuff. It's a little crazy because we've been at this an hour and 16 minutes. And it's like, this is the longest one we had, but it's been so easy. And maybe we should just have you back another time, like 4 or 5 months from now.
Well, if you pour more wine.
I will.
Well, can we do something? You
can do whatever, man.
When he has his next big exit, that you can tell us what you can tell us about the deal, but kind of give us the anatomy, not the anatomy, kind of like
anatomy's
post-mortem of how that whole thing went, from the get-go, what you saw, the ups and downs of that deal to the exit. I
love that story.
Because your last one was really cool, and I think you're going to have many more cool ones.
Yeah, I think, we got some ones brewing.
That
are cooking pretty good, but there was some saga in that. Too. I got some front row seat in there.
Because our whole story is it's never a straight line from start to success.
Yep.
There's always some potholes, some bumps, obstacles.
And maybe we need to talk about a few of those potholes and bumps next time.
Yeah, I was just thinking about a deal that just exited late last year, December, and company had a cool product in life sciences arena, and nobody wanted to buy it, and they had to pivot, and they pivoted to the same product but made it for tiny kids, like neonatal and small children, and finally got through it. And it just took them a lot longer than it should have, but they got to a successful exit. So it was kind of a cool story of they're almost
out.
And then it comes back and it becomes a success, and the investors actually make money on it. So some of those stories of watching those things, kind of the twists and turns, the ups and downs, and then they actually turn out, because I could tell you a bunch of other ones that just went to zero, hit the wall, and you don't learn a whole lot from. But they're not as exciting as a story.
But Apple almost went bankrupt. I don't know if you knew that. And there's a couple other big ones that we mentioned in previous podcasts, which was like, no way. There's no way they almost went bankrupt. And I love hearing those twists and turns.
Yeah, that's amazing. Cool. These things are living, breathing things.
Disney is going pretty bad. Oh, battery low, powering off. Okay, I guess Tony is
Peace
done.
Out. Nice talking to you guys.
But why don't we say goodbye for now, and then let's call you back, Scott. We really appreciate having you here. Thanks for being here.
Yeah.
And until next time, we'll get this up, and we'll see what everybody says.
All right.
So thanks a lot.
Sounds good. Thank you.
Save it.
Yeah, you bet.